In Investing 101, I'm bringing in Dave Bartosiak of Zacks.com to talk about some stocks that we mention on the show, but sometimes we mention those stocks in trading terms and not in investing terms. So good to have you back on the show.
Great to be back, as always.
Let's start with Under Armour, because some people might view this as an investment stock, and that's because it comes with some high-profile athletes, and of course we have the Olympics coming up. So if you were to actually invest in Under Armour, what would you do?
So I guess the way that you want to play it, or that I would play it here, is, we do have the Olympics coming up, right? Mm-hmm. So you're going to get a lot of athletes that are out there that are going to be representing their, respective brands, really. And whether or not they could show the actual sign or the signal, that doesn't really matter, right? But you're going to see different sponsorships from different countries, so and so forth. So I think what I would do here is, leading up to that event, it's going to be a very high-profile event. And so they're going to have some high-profile athletes that are going to be out there. So basically, I would be going out and just buying stocks like Under Armour in the hopes that their profile kind of raises. The other thing is, you've got football season right around the corner. I know it doesn't feel that way. It's 100 degrees outside, but football season is right around the corner. So you're going to start to see people get more and more interested in Under Armour that way too. Now,
something that wise traders do, though, if they want to invest early, they want to get ahead of the crowd. So how does an average person know when to get in, and maybe even when to sell it down the road?
Sure. I think the important part for the average investor out there is that you got to know that you're not going to get there at the exact perfect time, right? Mm-hmm. But you don't have to. If you think about it, if you're extending your scale over a longer period of time, then the edge that the professional guys have, the edge that the high frequency traders have, is gone, because you're just gonna be there and kind of linger forever. You're not sitting here day trading, going in and out. So you don't necessarily have to pick the perfect day, the perfect time. If it's something you think is gonna develop over time and be a trend for many years, then don't worry so much about the timing.
How would you do your homework on this stock? Because I'm a big advocate of do your homework before you buy any stock.
So really, go shopping. So part of what you do is you go ahead and go to Finish Line, you go to Foot Locker, you walk around your local mall, you go to Nordstrom, wherever you want to go, and just kind of check out and see, who's taking up the majority of the rack space here, right? And then you can even ask the people working there, hey, are a lot of people buying these? Is this like a popular thing? You can go ahead and ask your kids, your nephews, your nieces, the younger generation, because they're usually on top of things like that. So that's part of what you can do. The other thing is take a look at who your famous athletes, your favorite athletes that are out there. Find out who they're signed to, and find out where they're getting the sponsorships. And if it's somebody that you like, that you think is going to do well, then maybe that's the company you should start going with.
Another stock we tend to talk about is Amazon, and I'm sure there's people out there, Dave, who are thinking, but this stock is so high. It's trading above $700. To make an investment is to really put a lot of money down. How do you handle a situation like an Amazon? And people do think, it's a great company and it might go higher, so they don't want to miss the trade. They don't want to miss the investment.
Right. That's like the great sort of myth here of the retail investor, is that, if a stock's $10, it's a cheap stock, right? But you and I know, it's really that's just a function of how many shares are outstanding. Really, the company, it's their market cap, right? So whether you buy a $760 stock or you buy a $6 stock, it doesn't really matter. It'll still go up, it'll still go down. That's just a function of, how many shares outstanding. So they could split tomorrow. It doesn't make the actual share price any cheaper in the grand scheme of things. It's just like, to the naked eye, it looks cheaper, right? Mm-hmm. So I say, don't worry about it. You don't have to buy 1,000 shares of Amazon if you like Amazon. If you want to buy 10 shares of Amazon, that's totally fine. It's completely fine. Just worry about the dollar amount that you're investing, and don't worry about the actual price of the stock.
Well, Dave, thanks so much for your lessons in Investing 101. Great to have you here. Thank you.
Great to be here.